Good afternoon. Welcome. Thank you all for joining us for our webinar. We are very excited to have you. We are 1 week into Q4, so if you aren't feeling the pressure of the impending holidays, you probably will in the next week or so. But again, we're so glad you're here with us. We've been talking a lot about money and understanding the money that your Amazon business makes you over the past few weeks in our extras episodes. And now joining us for our webinar to kind of wrap it all up is Tyler Jeffcoat. Tyler, thank you for joining us. Thank you for being here. Thank you for your expertise. And we're going to turn the time over to you where we will be discussing Amazon profitability. Just a kind of housekeeping notes. We'll be recording this, so if you miss any of it, we will share it later. We also will do questions later on. So any questions that you have, feel free to post them in the chat, and we will get to them during our Q&A at the end. But for now, I'll turn the time over to Tyler. Hello.
Hi, thank you for having me, Kate. Thank you, everyone who listened to the podcast that Kate and I put together, and just excited to talk about. This is a really interesting topic for accountants, right? Not everyone else always cares about the profitability question, but we have a lot of folks signed up. I think we're going to have several joining us over the first few minutes. Kate may have alluded to this, but we do have a poll going up right now that you should be able to give us some insight into whether just kind of what your Amazon business model is, what you call your core business within Amazon, and you may have some pieces of several of these, but just wanted to get a sense of who's on the call, so you guys can keep filling that out. As of right now, it looks like private label is the most popular selection, so that's kind of interesting. So real quick, I'll make this super quick, and I apologize that you have to look at two pictures of me here. That's terrible. We're going to lose half the contestants here, but yeah, I'm one of those guys. I'm an accountant. My MBA focus was actually in finance, mergers and acquisitions, and other kind of how do you drive profitability within companies. I was a banker for a few years. I started a healthcare company and sold it. We had a good run at Care to Continue, zero to about 120 employees in 4 years, and I was the minority partner that got to sell my stake in that business. Grateful for that opportunity. And then I partnered with a close friend of mine named Brandon Checketts about 2 years ago to start this company, Seller Accountant. We are a very, very, very focused accounting firm. All we do is provide bookkeeping and CFO services for e-commerce sellers. There's obviously a pretty strong skewing towards Amazon sellers. And so we've been really fascinated by some of the questions that you guys, the things that you guys deal with regularly. And so just to kind of give you a quick picture, by the way, just a quick update on the poll, we've got about 60% of our folks that are private label, kind of online native brands. That's kind of interesting, a little bit of arbitrage and a little bit of authorized reseller. But a pretty strong percentage of the folks so far are just private label sellers. And so that's great. So this, I think this content will be really applicable to you. So we have a lot. I've delivered some of this content before, and I want to, full disclosure, there's a lot we're going to dive into, and it's going to get kind of technical for several of the slides. And I just want to reiterate what Kate just said, which is that everything we go through is going to be recorded. There's a couple of tools, one in particular I'm going to mention in several slides, that if you would like access to it, you can just fire me an email. I'd be glad to give it to you. But so we've had the first poll here, and Kate, when you get a minute, maybe go ahead and start working on that second poll. We just want to really continue to understand how how this audience is working. But let me run through the agenda real quick. So I'm going to take just a second to talk about why there are still millions of people flocking to Amazon. My team did an aggregate study over the past year where we tried to gather as much Amazon sales data as we could possibly get our hands on. Somewhere between $40 and $50 million of annual sales data. And we just wanted to try to get to the bottom of the question, how profitable are these businesses? And so that's kind of what drives the rest of this webinar, which is what did we learn from that study? What are the things that separate the kind of winners from the losers when it comes to sellers? And so I'm going to get incredibly practical on some things that you can take away to help you build profitability into your business. And then if you've already got a little bit of a larger business, how do you build some scale into it? We'll obviously have some Q&A then on the backside of it. So kind of talk about Amazon for just a minute. And just a FYI, whenever Kate, oh, here we go. So Kate has loaded another poll for us. It says, how satisfied are you with your 2019 sales so far? hate it, don't like it, kind of meh. I like it some, and I love it. And I'll let that run for a second. So, listen, the e-commerce landscape is continuing to evolve. It's growing. Walmart, Target, these other players, Wayfair, are spending billions of dollars to continue driving their marketplace presences. Amazon is going to continue to be king, and from everything I'm seeing, they'll be king for the next 5 to 10 years at least. And so if you have a brand idea, especially because we had such a heavy skewing towards sellers who have a private label idea or trying to launch their brand being online native, one of the well, the good news is that Amazon is still exactly where you want to be with your business. And there's two fundamental reasons. If you're looking for kind of nerd speak for why Amazon is actually the best place to run your business, it's that Amazon is still the most capital efficient business model out there related to getting products onto the market. You don't have to have as much cash. You don't have to buy a warehouse. You don't have to have a fully integrated or fully don't have a fully integrated supply chain. You can just develop a product and you can learn, you can spend your money on just a few things and you can get it on the market. Same thing when it comes to this competency efficiency. So the idea is that Amazon solves enough of the problems for us that as long as we're good at something, we have to pick something within this business model to excel at. But as long as we find something that we can carve out as a niche, there's still tremendous opportunity to make a great living on the Amazon marketplace. And so let's start there. So here's what I want to kind of unfold to you guys here. This study that we did, basically the first question was how profitable was the average Amazon seller? And so let's talk about it here. So this is so again, we had maybe $40-50 million in Amazon sales. And what we did was we took that and kind of normalized that data around $1 million seller. What would the average $1 million seller do in terms of their profitability? And this is kind of what it looks like. So I'm going to see if I can get a little pointer here. Maybe not right now. That's okay. Yeah, here it is. All right. So as you look at the slide here, a little bit of refunds damage to this brand. But a couple things I want to bring your attention to, and we're going to talk about this a lot over the next couple of slides, is that on average, our Amazon sellers were needing about 30% of their budget in COGS. So this is just raw product cost. This is the money you're actually paying to land your goods from a factory to the States, getting it into a factory or into FBA. Across the board, your kind of fully loaded FBA fees, this does include some of the inbound freight from Amazon, was about a quarter, about 25% of sales. Amazon commissions, obviously the 15% there, leaving us with a gross profit of about 30%.
Hey, Tyler.
Hey.
Hey, our screen that we're seeing is black.
That is not going to work. Okay.
So you're talking about profitability, and we're seeing no profitability.
Well, which is did that fix it when I stopped messing with it, or no?
Nope.
Okay.
Nope.
I am so sorry.
That's okay. I will say, while you're troubleshooting that, I've been working on our next set of polls where we're actually talking about profitability, and we're going to ask you. There it is. We're asking those of you that are joining us kind of how satisfied you are with your profitability. Sales growth wise for 2019, around 45% of people said that they felt like their sales growth for 2019 was it's okay. So I wanted to give you guys that info because I'm prepping the next poll, and for some reason it won't let me enable two polls at once. So, but there you go. 45% of those that are attending said it's okay. Sales growth is okay this year.
Okay. Well, sorry about that for the slides, guys. I think I have it back up and running. Kate, let me know if it gets off track again. So this was the P&L I was walking through, and the thing I wanted to bring your attention to was, the product cost of goods sold at 30%. I talked about the FBA fees, commissions you can't really control, so you've got 15% there. It's leaving you with a gross profit of about 30%. And by the way, as I can already see here, we have several people that kind of hate their profitability, some that are okay with it, not a whole lot that love it. So that's kind of interesting. Kate's getting the second poll up there. So I think it's kind of what I see across the board. I would say that across the board, if you've had a pretty decent year from a sales standpoint, people tend to be pretty comfortable with their sales growth. as I've talked to more and more sellers out there, a lot of sellers are just not happy with how much money they're actually bringing home, right? How much of it is ending up in their pocket at the end of the day. And you guys have heard the classic adage, sales is vanity, profit is sanity. But it's true. You go to one of these conferences, everyone wants to talk about how their sales are growing. I'm launching new products. You don't really get a lot of cocktail conversations about the profitability. And the reason is that there's not a lot understood out there about how profitable these product mixes should be. And frankly, if you're really profitable, you probably keep it secret to try to keep your competitors from jumping in on it. So, looking at this gross profit line of 30%, that was pretty consistent across the line, at least for the stronger sellers. And then you look at that next line, advertising, which we'll talk about this more in a minute, but advertising has tended to be about 10% of the budget, leaving us with this really critical metric that you guys might have heard kind of coming onto the scene. It's called sellers discretionary earnings. This is a measurement of how much free cash flow your products are generating before overhead. So this is your gross profit minus your advertising expense. What kind of juice does it take you in advertising to get your product to market? And you're left with this discretionary earnings. You can choose to pay yourself or pay for the SaaS products, interest expense, that kind of thing. So looking at overhead, net income, here's the bottom line. After you pay taxes, the average Amazon seller at $1 million isn't making nearly the amount of money that they should be making. And so this got us kind of asking the question, why? I'll let you look at it in a different format. This is actually the same data sliced and diced a little differently. And you can see here that entire bottom half, everything that's not light blue or darker blue, is all Amazon. For a lot of our sellers, this 10% advertising, little storage, little freight, you get your 15% commission and the FBA fees. You have a significant business partner in Amazon. They love it when you sell stuff. What we want to make sure as sellers is that we're engineering profitability into our product mix, into our portfolio, so that we actually get to keep this money. Because again, as we've looked more and more and more at these sellers, some of them, now let me say this, a large number of them were excelling. And so that's what I want to get into now. This is maybe the meat of the webinar here, is for those sellers who are doing well, the ones who are reaching their goals, that are, a little more than meh, it's okay. They're excited. They love their profitability. Everyone wants to get more profitable, by the way. But of the ones that are loving their profitability, there are some things that separate their performance from the other sellers. Before we dive into that, I want to give you just a couple of kind of hot topics for why some sellers really struggled. These are some of the sellers that were really underperforming. And you can kind of look down this list. I'm not going to spend a lot of time on it because I really want to get to the practical stuff here in a minute. But basically, you can almost see a P&L kind of unfold in front of you here. They don't have the sales traction. They haven't found a product blend that they can move, that they can get to sell at a profitable price. There's only a couple things you can do about this. You can increase prices, you can sell more of what you have, or you can bring on new products. But if you don't have sales traction, obviously you don't have a business. The one that I want to really talk about when we get to the next section of the webinar is margins, cost of goods sold. And so here's my assertion. This is my assumption, and I've seen it over and over again. Your cost of goods sold is actually more important than your sales. It's crazy to say that, but I've seen so many sellers that if you're willing to give it away, people will buy it on Amazon. What's much more important is, how can I actually capture some margin in these sales? It doesn't mean that you're not going to test some things that fail. I have several friends that are in the high testing world. They're going to test 10 products, and they expect 4 to 6 of those 10 products to make it. So this is not that you have to bat 1,000. It just means that you need to engineer profitability into your products from the front end. Obviously, if you can't manage ads, I would say advertising is kind of the silent killer of Amazon sellers. Really important to understand how your advertising is impacting your margins. It's really nice. It's nice being an Amazon seller because we are fairly lean by nature, but there are still, things that creep onto the P&L down below the advertising line that can really crush our cash flow. And so it's just really important to keep a close eye on things. Keep an eye on how much money you're spending on the SaaS products and on the contractors. Are you actually working hard to pay them, or are you going to pay yourself? This issue of being undercapitalized, if you don't have enough cash in the business, then you're generally forced to borrow money. And sometimes if you haven't planned well, we'll talk about this in a little bit, but you're going to be forced to borrow money as an emergency. And whenever you have to borrow emergency money, that is extremely expensive capital to bring into your business, which obviously results in too much interest expense. We see some sellers that really end up in kind of a debt spiral where they're having to try to fund purchases with high interest debt, and it's a really tough way to run your business. As this poll has kind of come to an end, it looks like we have more than half of our sellers say that their profitability is okay, but a lot more don't like it than do like it. So that's kind of interesting. About 3 times as many sellers, double to 3 times, are saying they don't like their profitability. So hopefully we can help here. So what do you do about it? Right? I mean, I'm not super satisfied. I'm saying, meh, my profitability is okay. It's not where I wish it was. How do I move into the fourth quarter of 2019, and then more importantly into 2020, in a way that drives profitable sales for my business? And so what I came up with as I studied the data that we got out of this last year's study was 5 things, kind of 5 habits or 5 practices that I felt like really separated the top performers from the rest of the sellers that we studied. And I want to just walk through each of them pretty quickly here, but give you some really practical how-to on each of them. So again, this is where it's going to get a little bit quick. So buckle up. Here we go. So number 1, the most profitable sellers keep score. This is going to seem pretty easy. This is pretty intuitive, but they know where their money is. They can answer the question, did I make money last month? Which means they're going to have to, on some level, capture their financials on an accrual basis so that they can actually see, okay, the sales that I made last month, the advertising dollars that I spent last month, did those result in a profit for me or a loss? Obviously a practical nugget here would be, if you don't have an accounting system, go ahead and pick up something like QuickBooks Online or Xero and try to keep up with your financials a little bit more closely. This is kind of an example. What we help a lot of companies prepare their businesses to sell, to put on the market and try to sell the business. What does an investor grade P&L look like? And it kind of looks like this. This is not the entire thing, but you need to be able to clearly see how each of your sales channels is performing. You need to be able to clearly see the items that should be loaded into cost of goods sold, and you should be able to see what your margins and advertising are. Make sure that you can understand 1 month versus the next month, and all that kind of stuff. So let's keep moving here. I want to go to the second one. So the second thing, so the first one is they keep score. They keep an eye on things. The second one is focus. And I don't know if this is going to surprise you guys or not, but I'll explain this graph a little bit more as we go into the next couple of slides. But basically the 5 poll options on the first poll, retail arbitrage, kind of wholesaler or authorized wholesaler, private label, intellectual property, or legacy brands. Those are the 5 initials, if you will, that I have here on this graph. And it's really important to understand who you are. What is my core business? And so, a great philosopher, my dad always said, spend your time where you're making your money. And I that could not be more true than it is in the Amazon space. And here's the reason. Looked up the definition of a competitive advantage today, and it's a condition or circumstance that puts a company in a favorable or superior business position. And so here's the point. The sellers that try to get too scattered. Today I'm going to open a Shopify store, and tomorrow I'm going to open up 3 new brands, and the next day I'm going to try to launch an influencer marketing campaign, and the day after that I'm going to they do 1,000 things and don't do any of them well at all. Those tend to be the sellers that have really struggled. The sellers who are killing it, the ones that have the profitability that we would say are elite, that are in the top 10%, the top 5%, they understand what their fundamental competitive advantage is. They know what they're good at, and they focus all of their guns on one problem at a time. I'm going to actually crush private label. Like, a lot of us are private label sellers. I'm going to actually make sure that my listings are optimized. They're going to be really good. And then I'm going to send traffic to the listing. I'm going to do that, and I'm going to generate cash flow on Amazon before I turn around and try to launch those same products on other channels. This doesn't mean that you shouldn't open multi-channel selling businesses. What this means is that you need to recognize that it takes an awful lot of money and a lot of resources to do those other channels correctly. And so make sure that you spend your time to build profitable cash flow now, so that you have that resource, you have that money down the line to go expand. And so, just focus on conquering one beast at a time. I'm going to dive into this chart a little bit more for my third point here. The most profitable sellers, they manage this delicate balance between the margin left by cost of goods sold and their advertising expense. And so what this graph is actually saying here is if you're an arbitrage seller and you have to spend a pretty high percentage of your sales on COGS, you can't afford to advertise much. This is intuitive, by the way. You guys know this. There aren't a lot of RA sellers that are doing a lot of advertising, at least on Amazon. As you go down this value chain, and now you're a private label seller, or you're an intellectual property based seller, you're going to have to advertise more to be competitive in your marketplace, because other competitors are going to be advertising. But in order to do this, in order to do it profitably, you need to make sure that you purchase your goods correctly. In other words, if I'm going to have to spend 20, 25, 30% of my budget on advertising, I better buy right. I better have a really good cost of goods sold ratio. And this kind of gets me to really a kind of a practical nugget related to balancing these two statistics. So this is that same either wheel of fortune or wheel of death, depending on how you look at it, that we looked at a few slides ago. And I wanted to highlight the advertising and product cost of goods sold segments here. If you notice here, this is kind of the average profitable seller, has about 40% total between advertising and product cost of goods sold. That's a good target. And I just want to say this, there's not a whole lot. I mean, yes, as you get scaled, you can do some things to lower your FBA fees. Amazon commissions kind of are what they are. You might be able to shave a point off of the freight, but there's not a lot you can do about some of those categories on the bottom of this screen. The two categories that you can really impact to drive those discretionary earnings, that cash that you get to actually keep, are advertising and cost of goods sold. And so I encourage you, if you're not doing this already, to take a look at the relationship between those two categories. If your cost of goods sold tend to be 50% of your price, and then you have another 10% in advertising, all of a sudden the combination of those is 60%, and you might be dead in the water, because you're going to have a hard time surviving the level of Amazon fees needed to generate cash. Now, if you're doing a lot of volume, you can afford to do a little better than that. But for the average private label seller, I'm going to try to treat these two colored areas here as levers. If I need to increase my advertising budget in order to compete in the marketplace that I'm in and the competitors that I'm against, I'm going to have to find a way to either increase my prices or decrease the dollars that I'm spending on cost of goods sold, or I'm in deep trouble. And I can afford to lose money for a few months. But to be honest with you, most of the successful sellers that we come in contact with aren't having to give away product for too long. They aren't having to play with the pricing for too long. They tend to be pretty focused on having some profitable sales right off the bat. And so anyway, for what it's worth, I would recommend taking a close look at your ad. I'm not talking about ACoS here. I care about ACoS because I want to compare it to itself over time. But I actually don't care much about ACoS. I care a lot more about what my total ad budget is as a percentage of my total sales. And so that's what I'm talking about here when it comes to advertising. And I really care about my product cost. And when I think product cost, I'm thinking all in, baby. What does it take me to get through tariffs, duties, freight in? What's the most fully loaded number that I can put on my cost of goods sold to give me a real clear picture of what this product is? And here's the bad news, is if your product isn't able to meet this metric, or you don't believe that it can, this kind of 40 to 50% rule for advertising plus cost of goods sold, it may be that you need to start investing in some other products, and that this product is not a keeper. And that kind of leads me to the fourth thing. So the fourth habit or practice of our most successful sellers is that they are willing to grade and, yes, sometimes fire underperforming SKUs. It's really easy to view your products as your babies, right? This is the cute kid here on the right-hand side, but these are not your babies. These products have got to produce, man. They've got to get some money in the system, and if they can't do it, after, kind of almost view it like an employee. I'm going to put you on a probationary period. And if you can't generate the profitability that I need you to generate, I'm going to have to cut ties and invest my resources in another product blend, because I want to survive in this business and I've got to fight for margin. Here's what I want to do for you guys really quick. This is where it's going to get pretty practical. If you have never gone through and graded each of your SKUs individually to understand how profitable each of them are, I want to show you how to do that manually really quickly. All right, what you're looking at here is, if you go into Seller Central and you go to reports, you go to fulfillment reports, look for a report called the fee preview report. Download the CSV of the fee preview report, and it's going to give you a ton of data that we don't care about. But it's going to give you a couple of the columns here that we really care about. And the first one on the left-hand side is obviously the name of your SKU. The next one, I've condensed a bunch of the ones in the middle, but the next one that you can see is what you're actually selling the SKU for on Amazon. And then they're going to give you a total fee preview. This is what I have in the commission and in the FBA pick and pack fee. And then what I'm going to have to do is I'm going to have to go in there and upload my actual cost of goods sold per unit into a new column. So I'm going to create a new column Z. If you were to explode all this, this will be column Z. And I'm going to either, use some kind of a fancy VLOOKUP, or I'm just going to go type, here's what it cost me to get one of these units when it's fully loaded. And then obviously this kind of yellow cream area in the middle here is a calculation of the gross profit if I were to sell one unit. So for SKU 10,001, this is the very top one. Every time I sell one unit, I get $47.57 of gross profit, or about 32%. That's pretty good. Now what I have to do is create another column, and I'm going to get my average ads. Now I'll talk about some of the tools here in a minute. Obviously, it's much better if you knew exactly how much you were spending on ads for each of your products. But if you're doing this manually, that's pretty challenging to do. And so what I did was I just went for an average. This guy's spending 10% of his entire budget on ads. And so I just kind of across the board did an estimate that it's going to cost me $15 per unit to move this first SKU. And there we get to that SDE, that seller's discretionary earnings. This green area of this spreadsheet that you can manually make for yourself, it took me 5 minutes or something like that to make this one. This tells me how happy I am every time one of these units moves. Every time I sell one, how much of a smile do I get on my face? And then the last two columns, I'm actually going to go into a couple of reports related to volume within Seller Central. And I just want to see how many of these did I move in the last month, because if I only sold one of them, I don't care that much. But if I've sold 1,000 of them, I care a lot. And so as you can see again, for this first SKU over the last 30 days, this seller sold 45 of them, which means in total, this SKU generated about $1,500 in discretionary cash, the $1,465. That's money in my pocket. I'm happy about that. But now you look at the second SKU. The second one on this list, before you take into account advertising, appears to have a positive gross profit. But once you actually understand the impact of advertising on this particular ASIN, he is losing money. He is stroking a check for 37 cents every time he sells one of these units. And the bigger problem is that this is his biggest mover. So this is a unit that he's selling 1,250 of every 30 days, which means literally if he just stopped selling it, he would give himself a $500 a month raise, right? That's what that negative $462 is. And so the reason I'm saying this to you is not that you're going to go and just fire every SKU. That's not what we do with this with our clients. What I want to do is I want to create this spreadsheet and then sort it by either worst or best and discover what my best performers are and see how I can enhance them, kind of get them from an 8 to a 10. And maybe even more importantly, try to identify what my really cruddy performers. These are the SKUs that are not cutting the mustard right now. And I need to go into an aggressive plan to try to fix them. Is there something I can do to optimize the listing? Is there something I can do to get better videos, increase conversion? Is my pricing right? Did I screw up and forget to price it given that there's a new tariff? Is there something like that that's costing me margin on this product? And then is there something I can do to turn this product around? And I'm going to put it on a probation for 30 days or 90 days or 60 days. And if I don't see improvement pretty quickly, I'm going to phase it out and liquidate it. And so what this allows us to do is to try to get those SKUs that are absolutely killing us off of our books, because almost every seller that has more than 5 or 6 SKUs has at least one. I think this is a true statement. I don't think I've ever met a seller that has more than 10 SKUs that doesn't have at least one that's killing them, unless they focus some energy on it to try to make it better. So if you get tired of doing this manually and you want to make the advertising portion of it more accurate, there's got to be 20 tools out there right now that you could pay for. If you're smaller, they're a little bit expensive each month, but the tools like Helium 10 managed by Stats, Sellix, Seller Legend, Seller Labs has a couple tools that can help with this. There's all these tools out there that actually go into the Amazon APIs, grab the data that I'm using for this, but also pivot it against your actual advertising data so that you can pull an individual P&L, right? An individual profit and loss statement for each SKU over a certain period of time. That's obviously much easier than having to create the spreadsheet. What I really care about if I'm the seller is I want to know which of my teammates are succeeding and which ones of them are failing. And then I guess the third kind of quick practical nugget. The first one was how do you do this manually? The second one is you can pay for software that'll do it. But the third thing is I recommend having a performance goal for each and every one of your products. What do I expect this product to produce in terms of SDE, in terms of seller's discretionary earnings over the next quarter? And actually hold the SKU accountable. It sounds kind of funny because it's a SKU, but I want to understand if it's living up to my expectations, because if it's not, I might be okay with that now, but the next time a great opportunity comes up and I can invest my hard-earned cash into another product, I'm going to pivot and I'm not going to sell this product anymore because it's a loser. All right, moving on there. So again, the fourth one was grading, and sometimes you may even have to fire a SKU. The fifth one and the final one that I want to talk about, we'll get into a spreadsheet here in a second, is the best sellers know how to manage cash flow, and they manage it in a way that keeps them from those emergencies where you end up spending bukus of dollars on interest because you got to take whatever loan's going to come out the pike tomorrow, right? You need the money. It's got to happen tomorrow. Let's talk about this. Let's get into the technical part of this a little bit. We've created a little Google Sheet tool that we use to help do some forecasting for our clients. And this is just a screenshot of it. This will get blurry with numbers, so don't try to read this whole thing. But here's the point. The top half of this, we're pretty good at this. Most entrepreneurs are pretty good at kind of guesstimating what the sales are going to be for the next few months. January, this person expects to do $100,000 in sales. This person knows that they have on average 55% cost of goods sold, so they know what their COGS are. And you can kind of build this, ding, 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 ding. Here's what I expect my operating profit to be. But most sellers don't then turn around and think, hold on. Where is there going to be other impact? Where are we going to have other cash impacts in our business? In that financing section, we're going to have loan payments. This is actually an example of a business that maybe has a lot of loan payments, right? And then you go down to the inventory impact. This is a huge deal for sellers. If you're having to stroke a check for $20,000 as a down payment on a pile of product that's going to come in a few months, you've got to plan for that in advance, or you're going to be really in risk of running out of money. So here's my point showing you this is if you look at the very bottom, you can kind of see the impact, the total cash impact for the month, and then beginning cash, ending cash. This is, if you look just like a January, this is a month where this seller on paper, quote unquote, made $20,000 in operating profit. That's kind of up near the top. But because of their other cash outlays related to inventory and related to paying off their debt, they actually had negative cash flow. And here's where they're really in trouble. If you kind of look in the future towards April, down at the very, very bottom right-hand corner with me, I'm kind of looking at my face right next to it. There is a negative number. That ending cash available balance is $6,709 negative. This is not good. And so the power of a tool like this is that now I know this information at the beginning of January instead of waiting until it's an emergency. And here's a next slide where now, if I knew I was going to run out of money at the end of April, what would I do? I would go in March and find a loan to make sure I had enough cash to cover everything I need to cover. And if you have 3 full months to secure that financing, the odds of you finding the right financing, the financing that is an emergency, that doesn't have the outrageous interest rates, is just way, way higher. And so we recommend all of our sellers have some kind of a forecasting tool and update it each month so that you can take a glimpse into the future. And if you look like you're, and another thing I'll mention is you look down in the investing area, once you start making money, you've got to pay taxes sometimes every quarter for these estimated tax payments. And just plan for that. Know that inventory is going to impact cash flow. Know that taxes are going to impact cash flow. And instead of it being a surprise that catches you where you're really in trouble, plan ahead so that you can get this loan like the one I've highlighted on this screen. They bring in a $25,000 line of credit, and all of a sudden they're in good shape. They're fine for the next few months. And I will just make this note about this. This tool is, I wish I had it in some kind of a landing page where I could send it to you that way. I don't. But if anyone wants to just email me, tyler@selleraccountant.com. So it's just my first name at the website.com. I will just send you this link. I'd be glad to share it with you. It's a free tool. Recommend using it. I've even embedded a video in the tool to kind of teach you how to use each section of it so that we don't have to get too bogged down with it in this webinar. But if this tool would help you, just shoot me an email. I'll be glad to send it to you. All right, so that's the five things. That's the things we saw. The things that were the most important separators from the sellers that were really doing well, that were really reaching their goals. The ones that if they were on this call would probably have been more likely to say, man, I really like my profitability, or man, I really love my profitability. And these represent opportunities for those of us who want to increase our profitability to take action. So those are the five things I went through. And now I want to pivot because I want to save some time for Q&A here. We also learned some things about scaling these businesses during this study that I wanted to share with you. If you've reached $1 million in sales, maybe you're a little less or a little more, you have some positive cash flow, and now you're on a quest to try to figure out, how do I take this thing to the next level? How do I really take my $1 million business and make it a $5 million business? Those sellers are practicing some more sophisticated things than the rest of the sellers that I interacted with. And I just teased out three of them that I want to share with you guys today. I'm calling these kind of scaling nuggets. The first one is building an operating system. What this basically means is you need to find a way to build some systems into your business so that it can afford to scale even if you can't do it anymore. If you run out of hustle, if you can't solopreneur it anymore, you're going to have the ability to hire people. Well, crud, now I got to figure out how to track time. Okay, I need a time system. And now I've got to figure out how to have my product life cycle being tracked automatically. Okay, I need a product profitability system. And now I've got to figure out how my team is supposed to negotiate contracts with suppliers that may still need my job, but here's our process. Here's how we do that. If you're looking for some tools to kind of practically help you build systems, this top book that I have on the screen here called Traction by Gino Wickman, highly recommend this book. It was absolutely instrumental. Again, the company that I built and sold a couple of years ago had a really great experience there. We went from 0 to 120 employees in 4 years, and we would have been an absolute disaster if we had not implemented Traction about halfway through that period of time. Highly recommend that book. Very practical tips and tricks on how to get your business organized, create a filing cabinet, so to speak, so that you can hang different systems and have them actually work for you as you scale. If performance in managing the performance of even your SKUs or employees is an issue, I also recommend the second book, The 4 Disciplines of Execution. And one more book I'll recommend, that's not even on here because I just read it a couple months ago, but it's a book by Chuck Blakeman called Making Money is Killing Your Business. Making Money is Killing Your Business. I thought that book was outstanding in terms of helping me understand what the goal for my business is, and then how do I reverse engineer all of my systems, my personnel, everything else, so that I can achieve the goals that I have for my business. So that's kind of the first hack is, hey, listen, you're going to get to a point where you being on the back of a napkin to run this business is not going to cut it anymore. You're going to have to get more sophisticated so that you can build some systems that are scalable and frankly sellable if you ever needed to raise money or sell the business. Number two is you got to improve your balance sheet IQ. The things that worked for you in terms of understanding your balance sheet, which if I can be honest, for most of our sellers, they have a very, very low balance sheet IQ. So if that's you don't need to feel bad about that. How does my balance sheet actually work? How can I improve my balance sheet? Because believe it or not, guys, your balance sheet is the best picture of the overall health of your company. Do I have enough cash? How am I doing in terms of managing my inventory? Where is my debt sitting? Have I accumulated some capital in the equity account that I can then disperse or use to grow my business? And so this is going to get technical. If you don't like spreadsheets and ratios, tune me out for about 2 minutes. I'll be right back talking about something a little bit more, a little bit more touchy feely if that's what you're into. But two of them that I want to break out to you really quickly. They're on the screen. The first one is called the quick ratio. This is probably the easiest way to calculate your liquidity. How capable is your business to meet its current liabilities given the cash it has? That's all this means. And just to give you some real numbers, looking at this kind of sample balance sheet that's on the screen, if you look at the very, very top, this seller, she has $221,000 in cash, and you add the $39,000 of receivables from Amazon, because Amazon's like clockwork. They're going to pay you every 14 days. And so her actual money available that she can use to pay her short-term debt is that 260. So that's the 221 plus 39. If I then divide that by her total current liabilities, that $71,000 number that's at the very bottom of the screen, I'm going to get a ratio. For this one, it is 3.66. What this means is that for every dollar of current liability, current accounts receivable, current debt that I owe, I have $3.66. So I'm in really good shape. This is a very, very well capitalized business. I'm going to be honest with you, most of our sellers. Kate, are we good still?
We're not seeing your balance sheet.
No, you can't see it?
Nope, we're still on 3 bonus nuggets for sailing. For scaling, not sailing. This is not a
Terrible.
sailing
Oh
webinar.
man. I'm
No,
so
you're
sorry,
fine.
guys. That's here I am cooking along. It's like the most technical. Is that it? Are you seeing the balance sheet here now?
There we go. Balance sheet
Wow. I can't
IQ.
imagine
That's
trying
what
to
we want.
follow this slide with me. Um that's pretty much a worst case scenario, guys. I am so sorry about
You
that.
said you said tune you out and then it went to nothing. So
I assumed that everyone was going to tune me out, so I just went with a preemptive strike. So, okay,
no one was. We're all engaged.
so forgive me. This is the balance sheet picture. I'm going to run through that top one again really, really quickly. Thank you so much, Kate. The quick ratio is just I'm adding together the liquid assets. Notice that I'm ignoring inventory. I'm just taking that total bank account balance of 221,000. I'm adding the immediate receivables from Amazon of roughly 39,000, and that gives me the part that's in parentheses. If you look at the left-hand side here, that's the 260,000. And I'm going to divide. So the denominator is going to be my total liabilities. This is my accounts payable, any sales tax payable, any VAT, any payroll, anything that's current liabilities. This is anything that's not a long-term loan, and it's going to give me a picture of if I have enough cash to cover my current liabilities. My point was that this guy or gal, this is just a sample, but this business, she's got plenty of cash. She is in great shape. In fact, she has $3.50 or $3.66 in cash for every dollar that she owes. That's going to give her a tremendous amount of flexibility to go invest in new products. She's not going to feel the cash crunch if things get a little bit lean. And with the point I was about to make, I'm so grateful, Kate, that you broke in there and fixed the screen issue. Let me know if that happens again. But most of the sellers that we interact with that are feeling stressed about their business, this ends up being a number that is less than 1. So instead of it being 3.66, it might be 0.5 or 0.6, meaning you're kind of in a position where you're praying for cash to come in. Oh, I need some more cash to come in next month so that I can really pay off my credit cards or handle my accounts receivable. And you end up in a position where you're having to continue pushing out that short-term debt, right? And it's a risky position to be in, although it's a reality. For most of our new sellers, you do not need to feel guilty at all if your quick ratio is 0.5. But you need to make it a goal for yourself as you start getting more profitable. Let me build a little bit of cash into this business. Let me build a little bit of cash into this business so that if things get a little sideways, if I gamble and lose on a product, if I try a product and it doesn't work, I'm not bankrupt because of one mistake. Second ratio I'll mention here that's really important for sellers is days of inventory. And what this basically equals is let's look at your current inventory value and let's divide it by your average or kind of a month's worth of cost of goods sold. And so for this person, again, she has 5.5 months worth of inventory on her balance sheet. If you multiply that times 30 days, you'll see how many days that she has. 166 days. Well, guess what? That's actually pretty average. I've seen, but if you're curious about the averages, I've seen anywhere from 90, 100 days on the really lean side to 150, 200 days if you're kind of buying up for the fourth quarter. Seen a little bit on the high side, a little on the low side. But I would say this is probably a tad high. 166 days would normally be a little bit high, except this business is very well capitalized. And so I'm not concerned about it. I look at this and I'm like, you know what? You got a lot of inventory, but you probably were able to buy it at a discount. You're able to manipulate those lead times and payment terms, and you got plenty of cash in the business. So this is no big deal. If that first ratio, if that quick ratio, the liquidity was, say 0.25, and you're trying to figure out where can I find some cash, a great way to look is trying to figure out how can I limit my days of inventory? How can I get this number from 166 maybe down to 100 and 130, 100 and 120? Because if you think about it, and again, this is technical, so I'm sure I'm getting some glazes here, but I promise it'll be over in a second. If this denominator, this cost of goods sold number is $22,000, this is what we're using here for this estimation. That means for every 30 days that I can lower for every $22,000 that I can lower my inventory balance, right? I mean, I can buy that cash. That's cash that's in my liquidity that I can use to make other investments. And so keeping lean, understanding where your inventory is. I think the practical thing here is just as you grow, you're going to have to understand where your inventory is so that you can make more intelligent purchases that give you the lead times that you need. It's one of those things that if you have a ship that's big, like you've got $1 million, $2 million business, you've got to have a tremendous GPS system to make sure, or like a depth finding system to make sure you don't hit the bottom. You don't want to stock out. And you either have to buy a crap ton of goods or you got to be really good at measuring them. And I think that's true for every seller. Either we have to have great systems for managing inventory, or we've got to be able to have the cash to buy it and buy lots of it. So we already talked about cash flow planning. I'll just show you this one more time. Let's see if I can get it to move over. Hopefully this screen is still working here. Just back to this cash flow planning picture here. Just know when you're going to run out of cash. These are what the most advanced sellers do. They know that they're going to have a cash crunch in 6 months, and they're able to start planning for it now. They're able to start getting the loan documents together now so that they're not in trouble, when they run out of money, right? That kind of thing. So, okay, let's keep moving here. Third bonus nugget, and then we'll take some questions. Guys, I just can't. I'm going to have to try to sell you this, and some of you guys are not going to believe me. My first business was on rocket fuel for 3 years. A good friend of mine, the founder of Seller Labs, his business was on rocket fuel. It's still on the Inc. 500 or 5,000. It has been for 3 or 4 years. The best decision that we ever made was finding a CEO roundtable, a mastermind group of like-minded business owners. That's actually how I met Brandon. Finding a group of those people that are highly confidential. It's an area where you can talk about the hard things. How do you make balance sheet decisions? How aggressive can I afford to be on this next purchase of product? Should I go ahead and launch a social media strategy? How much can I afford to pay contractors? How do I deal with some of these new issues related to sales tax? Having a group of established sellers around you that you can pick their brains is critical. And I'm not just talking about one of these kind of 1 or 2 day webinar or masterminds where you get kind of the latest, greatest hacks. I go to those. Those are awesome. Go to those. That's not what I'm talking about here. I'm talking about finding a group that's recurring, that creates accountability, and that can serve as your board of advisors. You may not be able to find one of these groups. If you happen to be anywhere near Atlanta, I'm leading one in Atlanta. Shoot me an email. I'd be glad to see if you might be the right fit. It's only for 7 and 8 figure sellers, but find somewhere where you can get deep into the weeds of how do I make better business decisions as a CEO, the kind of conversations that you can't have with your employees because they have a conflict of interest, right? They don't want to, their answer to should you pay them is always going to be yes. And so this is just my advice to you. If you're looking to be the kind of business that goes from $1 million to 10 million, you've got to surround yourself with the kind of people that have done it and that are doing it with you. And so I highly recommend finding the right roundtable. And I think that's really it on the content. A quick summary: Amazon's still a winner. It's not going anywhere. But there's a lot of sellers that aren't making the kind of profitability. Lots of you guys and a lot of the sellers we've talked to. Did we lose it again?
Nope.
Oh, great. The sellers are not as profitable as they wish they were. But if you can keep score, stay focused, manage your margins, grade your SKUs, and manage your cash flow, you can be one of the sellers that's performing way above the rest of the marketplace. And if you're looking to go from 1 to 4 or 1 to 10 million, you got to build an operating system. You got to improve your balance sheet, and you got to join some kind of a roundtable group that helps you get better. So, I mean, that's kind of it. That's the content for this webinar. I'd really love to have a discussion with anyone that might have questions. And yep.
Yeah, so that's why I popped in to start there. How do you, I'm going to just go with a question that just came in. This is from Sherry. How do you suggest finding a CEO roundtable? Any advice for her?
Yeah, it can be hard. I think a couple of places you may look, Entrepreneurs Organization, Vistage, or some of the larger groups out there that are kind of more of a franchise model where they have groups all over the world. So Vistage or Entrepreneurs Organization might be a couple you look at. But and to be honest with you, in terms of the Amazon sellers specifically, I just haven't found that many. I mean, maybe you guys can help me. I'd be glad to join one remotely once a month and just talk shop with 10 or 15 people. The key is it's got to be small. It can't be 50 people. It really needs to be 12 to 20 people that are really getting in deep. And so, again, if you're near Atlanta, I might be able to help you. But I think it's a challenge. We need way more of those groups, and we don't have them right now.
Sherry, one idea too is, and this is just kind of a random idea, but start a Facebook group. And if there are other companies that that you like the way they're run, and you think, oh, they might have some good advice, maybe try to find out who the CEO, who the owner is, and invite them to your group. Again, like Tyler said, keep it small, but might be a nice way that you could do a remote kind of connect with people type of a thing, is head to Facebook. Facebook groups are nice for stuff like that. I'm going to dive into the rest of our questions. Josie, she's wondering if you could give us the formula again for the discretionary earnings.
Yeah, so sellers' discretionary earnings is simply gross profit minus advertising. So if you look at a traditional profit and loss, you kind of have sales, refunds, and then all of your cost of goods sold elements. And what's left after that is your gross profit. What I'm saying is let's take it one step further and subtract direct advertising expenses, anything related to Amazon PPC or social media or influencer advertising that directly drives traffic. Let's subtract those so that we actually understand what the discretionary cash flow is from those products.
All right, next question, James. He says, my ratios are similar to your example. This is from earlier in the beginning, except for the overhead. Mine is much less, like 3%. Why is the overhead so high?
It's a good question. I think there's a couple of reasons. One is, first of all, you're performing well, so good job. Another reason here is that I think a lot of the overhead in my initial, he's referring to the little P&L that I ran into. Mm-hmm. A lot of the sellers, especially the ones that are kind of just running their business by themselves, actually are paying themselves some kind of a salary. And so to be fair, I think it was James, to be fair, James, part of that overhead expense is a little bit of a salary going to the owner. And that is probably a big part of the difference if you're not paying yourself a salary yet. But beyond that, you'd be surprised. It is difficult to stay lean once you start taking on expenses, and I applaud you for staying lean.
And if you want to hear, Tyler and I discussed at length kind of taking a salary and paying yourself, whether it's some sort of distribution or an actual paycheck, in our episode that came out last week. It's the extras episode number 31. So you guys can check that out either on iTunes, Spotify, wherever you get your podcasts. But if you want a more in-depth discussion about salary, you can go there and listen to that. Next question comes from Edwina. She's wondering, the report that you had where you grade your SKUs. Can you walk us through how you got to that report again? That's what she's hoping you can do.
Yes, I'd be glad to. So if you go into Seller Central, I don't have it up here. I think if you hover over reports and you go to fulfillment, so you're hovering over reports, you click fulfillment, and it's gonna dump you into that gigantic report list. That's all of the inventory reports and that kind of stuff. About halfway down the left-hand side of that report screen, there is a report called Fee Preview. And if you click on the Fee Preview, you should be able to download the spreadsheet or CSV version of that report, and that would be your starting point for the procedure I described.
And next we have Terry. Terry says, I know you work with a lot of sellers to get their books straight prior to exiting. You probably see some who get out too early and some who get out too late. What are your thoughts on exit timing? Is there such a thing as an optimal exit point balancing risk and reward? And he follows up with, appreciate your thoughts. We appreciate you for joining us, Terry.
Yeah, thanks, Terry. Yeah, so you know what? Yes, theoretically, the perfect moment, I think I've looked at the math enough at this that if you could somehow exit somewhere, if you can kind of imagine the growth curve of your business, and you could somehow exit at exactly 80% up that curve, where there's another 20% for the investor to have upside, and before anything happens to the market or to the validity of your brand, you get out. Theoretically, that's the moment you want to exit, right? I mean, but you don't know that moment. You never know what the future is. And so in the business that I exited 2 years ago, and in the businesses that I'm seeing being exited now, I think it is very tempting to wait too long or to be too rosy. But to be honest with you, I feel like it's a lot like trying to guess the stock market, right? You don't know what Amazon's going to do. You don't know what your product competitors are going to do. You don't know what the tariff war is going to yield, that kind of thing. And so my advice is to always be ready. Have your books in order, have your organization in order where you can command a top multiple, and then just be objective enough to let it go before you let it go too far. Because what most business owners do is they wait until they're burnt out. And now all of a sudden they really don't have a business that's very desirable to sell. What they have is a headache that they're looking to get rid of. And so my advice is to build a business that you don't have to sell. But when you do sell it, you're able to get maximum multiple, which again, it's a little bit of a, there's some voodoo, right? How do you see the crystal ball? But yeah, mathematically, I think it's like 80 is, if you can give enough upside to get through due diligence, give enough upside to let the other guy move forward. And then if anything goes wrong, it's not your fault. Obviously, you'd love to time that.
Paul has a question. I'm actually just waiting for a clarification from him on maybe. So he asked, of those attendees that are absent owners, how much of their expenses are salaries? So I think he's wondering, the people that responded to the study, how much of their expenses are salaries as a percent of revenue?
Yeah, I think it's a good question. If I understand the question correctly, I think if you're an absent owner, you're not working in the business as much. And to be totally transparent with you, I don't know that the sellers I talked to were heavily skewed in that direction. There are investors out there that aren't working in the business. And frankly, some of the more sophisticated investors aren't taking a salary because they don't need it. They're building the asset to sell. But I don't know that I have a clear handle. So let me just put it this way. The owner groups that are able to leave a bunch of that other stuff off of the P&L, they don't have the weight of salaries. They don't have the weight of interest because they're capitalized and they're not having to fund. Those that have a very clean P&L are obviously the ones that command the highest multiple. They don't have any issues on the deal when they try to get through due diligence. And so they are also going to be the ones that are the most profitable. But the average seller doesn't always have that luxury. Sometimes the seller is bootstrapping their own business. They're trying to get it off the ground and they've got to still pay the rent and the mortgage. And so in those cases, my advice is kind of, Kate alluded this on the conversation we had a few weeks ago, is just pay yourself correctly so that you can potentially get an add back for that if you end up going to market, because it's a salary expense to yourself.
And it sounds like his number is 6%. And he is wondering if there's anyone attending that is also an absent owner. He'd like to know what expenses, how much of your expense are salaries as well.
Yeah, I would say
of revenue.
That feels like a pretty good number to me. And if that's a post-advertising number, that's pretty strong. I've definitely seen some businesses that are, the first gentleman that spoke or had the question said 3%. I've seen some where there's no salaries added at all, but there's still contractors and consultants that have been as high as 10, 15% still, for the overhead. So I would, without knowing anything else about your business, I would say that's a pretty good mark. 6% feels pretty reasonable.
Let's see. And Edwina posted, this is all eye-opening and a bit intimidating at the same time. Yes, I agree, Edwina. There's some math involved in bookkeeping. Surprise, surprise. But thank you so much, Tyler, for kind of going through everything. There was that tool that you had referenced earlier, where you used to kind of grade SKUs. And if anyone wants access to that, you can email Tyler at selleraccountant.com. I posted, Tyler, I don't know if you have the chat up, but I posted your email address up there for people to grab. I guess we have one more question. This is from Jesse. Are you seeing sellers successfully branching off Amazon and going direct to consumer? Is it more profitable?
So a couple different questions here. Good question, Jesse. And by the way, I'm kind of late to the party here, but I'm finally seeing these, Kate. So sorry about that. But yeah, Jesse, great question. I think my point on expansion depends on your timeline and on your competency. So if you are the kind of seller who is good at cultivating a social media audience, or you have the resources to do that well, I have seen some sellers be very successful getting off Amazon, building a brand that isn't dependent on the algorithm. However, if your strategy is to maximize profitability over the next 12 to 24 months, which is normally the strategy if you're looking to exit in the near future, I have yet to find a brand that's Amazon native looking to exit in the next year that made more money on their exit by getting off Amazon. And here's why. In the broker world, this is my understanding. I have a lot of friends in the broker world. Until you can get your off Amazon sales up above, I'm going to say 20%. If your off Amazon exposure isn't at least 20%, you don't have enough diversification to actually represent a risk profile change. In other words, if Amazon shuts you down, let's just say you're doing $100,000 a month in sales, and then you're doing on Amazon, you've got $5,000 a month on your Shopify site. If Amazon shuts you down, you're still in trouble. But if you all of a sudden have 20, 25, 30% of your sales on other channels, then you're onto something. Then you have a portfolio of products that are actually diversified. So in terms of profitability, I think if you can cultivate and own the audience, the ability to retarget those audiences is pretty powerful. However, I have not seen a lot of models that are more profitable per sale than Amazon. I think most people are getting off of Amazon to try to find additional scale and to try to kind of not be in bed with Amazon so much, try to diversify the risk. But again, if you're having a 12 to 18, 24-month exit strategy, I would point all of my guns on Amazon. I would optimize every listing. This is just me. Take it for what it's worth. And I would optimize my brand for exit within the Amazon platform. Another reason for that is if I sell a business that has some poorly formed multi-channel sales, I'm actually selling a real pain in the ass to the investor. Whoever's buying this business is going to have to know how to do about 10 things that they otherwise wouldn't have had to learn how to do. And unless I've really documented those processes in a way that make them scalable, I'm not selling them an asset. I'm selling them a bit of a headache. And so just kind of keep that in mind as you're trying to build off Amazon sales.
Tyler, thank you so much for joining us. Thank you, everyone, for being here and being, not just willing to sit and listen to us chat but engaging with us and listening to our message. The reason I do this is to help you improve your business. And I know that's why Tyler does it too. So if you have questions, you can reach out to Tyler at selleraccountant.com. You can always find me at keywordpodcast.com and Kate at AmazonInsiderPodcast.com. Thank you all. We hope you have a great day.